Today, we're diving deep into a topic that's on every investor's mind, artificial intelligence. But we're going to look at it from a completely different angle. Forget the usual suspects for a moment. We're not talking about chip makers or software giants. We're talking about the one thing that underpins the entire AI revolution, the silent giant working behind the scenes. And that brings us to our main subject, NTT Data Centers. Is this the smartest, perhaps even the safest way to play the AI boom? Let's find out. You've probably heard it a million times. AI is the future, and it's true. But what exactly is AI in its most physical, tangible form? Strip away all the complex algorithms and neural networks, and what are you left with? It boils down to three fundamental things: incredible amounts of computational power, the servers that provide that power, and the massive cooling systems required to stop it all from melting. Think about it. Every single AI query, every image generated, every line of code written by a large language model happens inside a physical building, a data center. This is where the story gets really interesting. And while everyone is piling into the high-flying AI stocks, which are undeniably exciting, there's an argument to be made that the real, more stable winners are the ones providing the infrastructure. It's like the California gold rush of the 1850s. Sure, some miners struck it rich, but many went home with empty pockets. Who were the consistent winners? The people selling the picks and shovels. In the 21st century digital gold rush, data centers are the picks and shovels. They are absolutely essential. Without them, there is no AI. There is no cloud computing. There is no digital economy as we know it. So why might data centers be a better bet than pure play AI stocks? First, let's talk about demand. The demand for AI is exploding, and this directly translates into an insatiable need for more data center capacity. Companies like Google, Amazon, Microsoft, and Meta are in an arms race to build out their AI capabilities. This means they need more space, more power, and more cooling, and they need it now. They often can't build it all themselves fast enough, so they turn to specialized data center operators. These operators sign long-term leases, often spanning 10 to 15 years, with built-in rent escalations. This creates a very stable, predictable, and growing stream of revenue. It's a landlord-tenant relationship, but on a massive, high-tech scale. Compare that to the volatility of a tech company that needs to constantly innovate and stay ahead of the competition. Their success depends on creating the next big thing. A data center's success depends on providing reliable, secure, and powerful infrastructure. The demand is already there, and it's growing exponentially. They don't have to invent the demand, they just have to meet it. This business model is inherently less risky. You're not betting on which AI model will win, you're betting on the fact that the race itself is happening, and that's a much safer bet. But let's be realistic. No investment is without risk, and it's crucial we understand the challenges facing the data center industry. The first major risk is power. These facilities are incredibly power hungry. An AI data center can consume as much electricity as a small city. This makes them vulnerable to rising energy costs. If electricity prices spike, it can significantly eat into their profit margins. Operators are constantly searching for locations with cheap, reliable power and are increasingly investing in their own renewable energy sources to mitigate this risk. But it remains a significant operational challenge. The grid itself is a bottleneck. In many prime locations, there simply isn't enough power available to build new, large-scale data centers. The second major risk is capital expenditure, or CAPEX. Building a state-of-the-art data center is monumentally expensive. We're talking hundreds of millions, sometimes even billions, of dollars for a single campus. This requires a huge amount of upfront investment. These companies often carry significant debt to finance their expansion, which can be a risk in a high interest rate environment. They need to be confident that they can lease out the space quickly to start generating a return on that massive investment. If they build it and the tenants don't come, they're left with a very expensive, empty building. Finally, there's the risk of technological obsolescence. Technology moves at lightning speed. The servers and cooling systems that are cutting edge today could be outdated in 5 years. For instance, the industry is moving from air cooling to more efficient liquid cooling for high-density AI servers. Data center operators must constantly reinvest to upgrade their facilities to meet the latest technological requirements of their tenants. If they fail to keep up, they risk losing major clients to competitors with more modern infrastructure. This continuous need for upgrades adds another layer of cost and complexity to the business. So, with these opportunities and risks in mind, where does a company like NTT Data Centers fit into the picture? Let's take a closer look. NTT is one of the largest data center operators in the world. They have a massive global footprint with facilities spread across key markets in North America, Europe, and Asia. This global diversification is a huge advantage. It means they're not overly reliant on any single market or economy. If there's a power grid issue in one region, their operations in another can continue to thrive. It also allows them to serve global hyperscale clients who need a consistent platform across the world. What really sets NTT apart, especially in the context of AI, is their focus on high density and hyperscale facilities. They were early to recognize the specific needs of AI workloads and have been actively designing and building data centers that can handle the immense power and cooling requirements. They are investing heavily in technologies like liquid cooling and building strong relationships with power providers to secure the energy needed for future growth. Their strategic locations are often in areas with access to robust power infrastructure and fiber optic networks, which are critical for data-intensive applications. Furthermore, being part of the larger NTT Group, a global telecommunications giant, gives them a significant competitive edge. They have access to vast financial resources, deep technological expertise, and an extensive global network. This backing provides a level of stability and credibility that is very attractive to the world's largest tech companies who are looking for long-term, reliable partners. When a company like Microsoft or Google is deciding where to house their billion-dollar AI infrastructure, they want to partner with a proven track record and the financial strength to deliver on their promises. NTT ticks those boxes. So, is NTT Data Centers a good investment to capitalize on the AI trend? Well, it offers a compelling proposition. You get exposure to the explosive growth of AI, but with a more stable, infrastructure-based business model. You're investing in the digital real estate that powers the revolution. The long-term leases provide predictable cash flows, and the company's global scale and technological focus position it well to capture the growing demand. However, the risks we discussed, power costs, high capex, and technological change, are very real. Success will depend on management's ability to navigate these challenges effectively. They need to continue securing low-cost power, managing their debt wisely, and staying at the forefront of data center technology. Ultimately, investing in a data center REIT like NTT is a different way to think about the AI boom. It's less about the short-term thrill and more about a long-term strategic play on the fundamental infrastructure of our digital world. It's the picks and shovels play for the modern era. As AI continues to integrate into every aspect of our lives, the need for the data centers that power it will only grow stronger. What do you guys think? Is this a smarter way to invest in AI, or are the risks too high? Let me know your thoughts in the comments below. I'd love to hear your perspective on this. And if you found this video helpful and want more deep dives into the companies shaping our future, make sure to hit that like button and subscribe to the channel. It really helps us out. Thanks for watching, and I'll see you in the next one.